In this presentation, we will continue on with our comprehensive problem, this time recording the transaction on 110, which says, receive payment from client for work to be completed in the future. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Okay, so this is another one of those types of areas where we really just have to know the terminology. If we were to do this in real life, we would know what happened, but we need to know what the terminology is saying here from a book problem perspective. So we received payment. That means we got cash, so that's pretty straightforward. That's nice to know. That's probably where we will start, from a client for work to be completed in the future. So that means that we're going to do work. Why do we get, and we can always basically think of if a customer paid us, whenever we get cash from a customer, why would they give us money? Because of work, because of what we do. The only question is, when did we do it? Did we do the work in the past? Did we do the work at the same point in time? Or are we going to do the work at some point in the future? And that'll determine when the revenue is going to be recognized. So in this case, they paid us and we're going to do work in the future. This is the most unusual situation for most industries. Most industries, we don't get paid before we do work. If you happen to be in an industry where you get paid before you do work, that's nice. And there are many industries that do now. Some are going to be like, if we sell newspapers, it's a traditional industry. Most current industries are going to be things like, if we have subscription-based things. So subscription-based services like software or something like that. Then we often have someone pay for a year's subscription or something like that, and then provide the service. That means that when we get the money, we haven't done anything of value yet, and therefore can't record it as revenue. So that's the basic premise here. So what we're going to do then is go through our questions. We're going to say, well, let's start at where we should start before we probably should have gotten into all that, which is cash affected? We're going to say, yeah, we got money, and that's as it says, get paid. We got paid, so we got paid with cash. So cash is a debit balance. We're going to make it go up by doing the same thing to it, another debit. So I'm going to copy the cash. We're going to scroll down. We're going to put that in C24, right-click and paste. 1, 2, 3. The amount of cash that we received is $3,000. Then we're going to credit something for that $3,000. I'm going to do that with a negative of this number. Nice little formula. We could type in a negative $3,000 if we want, but I think this way is better. Because I would like to use formulas whenever possible. Okay, so then the other side is going to be, why did we get cash? We didn't earn it yet, so we can't credit revenue. If we had earned it at this point in time, we would credit revenue. If we had earned it in the past, then people would have owed us and we would be tracking it in accounts receivable. That's not the case either. We haven't done any work yet. So this is the strange one where we have to credit something called unearned revenue or unearned fees, meaning we owe something in the future. This is a liability account. We're going to increase the liability. And why would we do that? I mean, and the other reason this is kind of weird is because you might think, well, we're never going to pay the money back. Why would I increase a liability? We're not going to give it back to them in the future. But we are giving something in the future. We're going to give services in the future. So we do owe something worth $3,000, hopefully. That's what we're charging for it, of services. And if we don't do that, then we got to give the money back. So it is kind of a liability we have in the future because we have an obligation to do whatever it is we do. So we're going to copy the unearned fees, right click and copy, put that on the bottom in C25, right click and paste 1, 2, 3. And then I'm going to indent it, which is probably done for you already, but here's where it's at. It's in the Home tab, Alignment Group, and increase the indentation. There we have it. We're going to post this out. Remember, we could post this a few different ways. What we have just done is the process of journalizing the journal entry here in this blue general journal. Now we're going to post this, the process of posting, to the general ledger. You could make this a little smaller to do that if you want. If your eyes are not good and you want to practice scrolling around, we're going to do this with a frozen pane. So we'll scroll up to the top. I'm going to go to the right just a bit to get rid of that A column so we can see as much of the screen as possible at this size of screen. Then we're going to go up to K1 and then go to the View tab. And we want to go to the Windows group, Freeze Panes, and freeze the pane. Then if we go to the right, we can see columns B through E. our frozen. All right, now we're going to scroll down. We've got this cash. That's what we're going to post first. If we scroll up just a bit, that's our first account on the trial balance and therefore first account on the general ledger. We want to be on the credit side, so we're on the credit side of cash. Oh no, we're on the debit side. What am I talking about? We're in cell O13. O13, debit side of cash. We want to pick up this 3,000. We can even go over a little bit further if we want. We want to pick up this 3,000. So I'm just going to say equals and point to that 3,000. The 40,000 debit goes up by doing the same thing to it. Another 3,000 to 43,000. And then, of course, this 43,000 is being used to generate the trial balance. If I scroll or click to the left of the frozen panes and go right, we'll pop back over. There's the 43,000 being picked up. Here, we're out of balance by the 3,000. Now we're going to go to the unearned fees. So unearned fees is here. Unearned fees is our last liability account. If we scroll to the right, we've got the assets, we got the liabilities, and we're in these liabilities. Unearned fees is up top. Here it is, unearned fees. We're on the credit side, unearned fees, credit side. If we scroll back down, there's the 3,000 we want to pick up. So within cell AB9, we will say equals, scroll down just a bit and point to that 3,000 and enter. That brings the balance up from 0 by 3,000 to 3,000. This 3,000 then being used to generate the trial balance. If we click to the left of the frozen panes and go right with the arrows, there is our 3,000 there. And so what have we done here? We got cash. Cash went up. By the way, we're back in balance here, so debits equal to credits. So the positive debits minus the credits are in balance. Nice little check figure for us. We can see that the 3,000 went up in terms of us owing money, and we got cash. So we got cash. We didn't record it to revenue, but to unearned fees because we haven't yet earned it. What are we going to do with this unearned fees? We're never going to give money back. We're going to do the work, and then we're going to have to figure out that we did the work and record it, reduce the unearned fees, and record the revenue at the point in time work is done in accordance with the revenue recognition principle. We're going to do that with the adjusting process. So at the end of each month, we'll figure out, we'll say, if we were in an industry, say like an industry that did applications, computer applications, and we get paid before we provide the application to users, then what we would do is just collect money all month, and we would put it into unearned revenues, unearned fees. And then at the end of the month, we are going to go through all those unearned fees and try to figure out how much we actually provided to the users. How much did we actually deliver on the services? That if they have a year subscription, did we give them a month of subscription? If we did, we're going to reduce this by a month and record the revenue at the point in time that we earned it by providing the service to the customers. For more accounting information and accounting courses, visit our website at accountinginstruction.info.